Hello and welcome to the first episode of Stable Report's podcasts. Stable Report is a news site dedicated to curating the best resources related to stablecoin projects. We celebrate the development of stablecoins and see them as a stepping stone to mainstream adoption of cryptocurrencies for daily use in transactions. If you'd like to get acquainted with what stablecoins are, visit our website or follow us on Twitter at Stable Report and let us know what you think. As always, if you see we're missing something, please contact us. Without further ado, I'm glad to introduce our first guest, Kory Hoang, co-founder and CEO of Stably Blockchain Labs, a company based in Vancouver which issues StableUSD, a fiat-backed stablecoin designed to work across multiple blockchain protocols that will initially include Ethereum and Stellar. Kory, thank you so much for joining us today.
Thank you, Leon, for having me on the show.
So, I have to start with this question. What got you into crypto and what inspired you to create a stablecoin?
Well, I am an algorithmic trader, and I've been doing that on the side for about 3.5 years. And originally, I was trading stocks and derivatives, but then I used my trading algorithm and I applied it to cryptocurrencies last year. And as we all know, last year was a great year and made decent return from the bull market, as well as from my trading algorithm, which also had me looking into stablecoin because I needed to find a stablecoin to use, and there weren't any besides Tether. There weren't any, and I wasn't particularly a fan of Tether, and so that's what originally gave me the idea for Stably, for the current startup that we're doing, and so. That's how it all started. I got together with some of my co-founders, which are also algorithmic traders like I am, and we started writing our white paper, formulating our idea, and everything just kind of went on from there.
Oh, that's great. That's great. So what was the thought process that led you and your team to choose a fiat-collateralized model over, say, a crypto-collateralized model or a no-collateral model like seniorage shares?
Well, for us, it wasn't. We're not very particularly zealous about our model. It's more about practicality, right? We like decentralized stablecoins. Actually, personally, I am a fan of the MakerDAO project where they produce the DAI stablecoin, and I think that is one of the best decentralized stablecoins out there, and I wish them the best success and everything. But from a practical standpoint, to integrate decentralized stablecoins into existing supply chains and business operations is very difficult. There's a lot of risk involved. Where before, when you use just money, all you had to worry about was probably at most foreign exchange risk, right? And now, if you were to hold decentralized stablecoin, you have to worry about black swan risk, crypto volatility. There's a chance that the decentralized stablecoin mechanism could fail or crash or whatever. The stability that it has is not organic like centralized stablecoin, which is in our view, is not suitable for consumer application, which is one of the things that we want to focus on.
Right. I mean, aren't people concerned about collateralized models such as MakerDAO? I mean, the fact that they are over-collateralized and one needs to place 1.5 or even 2 ETH to get one DAI, and like you mentioned, if there's a black swan event, then who is interested on having DAI, in your opinion?
I think DAI is a good stable coin for now. And it has proven itself. I think it has about $43 million in market cap right now. And because it is completely decentralized, there is, that natural need for decentralization applications. Decentralized apps could use the DAI as, the field for its operation. Or there are people who have a lot of cryptocurrencies or ERC20 tokens that don't necessarily want to sell those tokens, but they need liquidity from that token. They could lock it up and as a collateral and issue DAI to get that liquidity from it.
Going back to Stably, I read your white paper, and I know one of the main things that differentiates Stably from other centralized stablecoins, such as Tether, are your four transparency channels. Can you explain a bit about that?
So the as we all know, if you look at Tether, I would say that Tether has two transparency channels. They have audit, and they also have this transparency dashboard on their website, which supposedly reports, the exact number of US dollar versus the number of outstanding tokens that they have in circulation. Now, on the audit side, they never officially released an audit. I know they released a statement recently. I think it was either today or yesterday. But that was just, technically not an audit. If you actually read the document that they released, it was just a statement, essentially, to say that they do have the money. And, the transparency dashboard on their website, who knows whatever number is put on there. For us, we will do quarterly audits, and we're going to use one of the big four accounting firms like Deloitte or KPMG, for example, to audit not only our reserve balance, but also our transaction records, right? And anything else that the public would like to see, really. The second transparency channel that we have is the hashing of off-chain transactions. And so, when people wire us fiat US dollar to issue a stablecoin or to redeem stablecoin, we will create hashes for those transactions and submit it to the smart contract. What that's going to do is it inform people in real life, in real time, of the transaction that just took place, and they can verify this on the blockchain right away. Now, we're still the one who submitted it. And so, you could argue that, hey, we can just submit a false transaction record. But, if you couple this with the fact that we are audited quarterly by KPMG, for example, there's really no incentive for us to submit any false transaction record. And so, so that's the second transparency channel. The third transparency channel is for on-chain transactions that we do receive. For example, if you don't send us wires, US dollar wires to buy our stablecoin or to redeem stablecoin, you can do it with Ether. We will accept Ether, but then that means that transaction stay on chain, right? So even when you redeem the stablecoin from us, we will send you Ether. So because that transaction stay on chain and this timestamp, anyone can publicly verify, how much Ether we have received or sent back to people for redemption. So that's the third transparency channel. The last one we have is, Tether transparency dashboard is self-reported. I'm just curious, do you ever use the alert function on your bank account where it texts you the balance of your account at the end of every day or something like that?
Of course.
Yeah, so, we can set that up for our bank account, and we could either send that email to a trusted third party, someone who can publish that for us, or an auditor, or we could put that to a mailing list. There's a lot of ways we could play around with that fourth transparency channel there, but essentially we could give the public a daily view into our reserve balances to, so they can verify that we do have the money themselves. So
interesting.
So that's the fourth.
So will your banking partners be public knowledge?
Yes. Once we finalize the details of our banking partnership, we will announce it. Right now, we haven't finalized the banking partnership agreement with. We're only in active discussion with them. But, we're confident that these will be finalized soon here within 2 months in order for us to start conducting money service business activities in Canada. So, yeah, very exciting development coming up. And in addition to banks, we're also going to announce our partners. For example, if you look at Bittrex here in Seattle, they have a program where they help you buy Tether. They will sell you Tether tokens if you send them US dollar wired And so they're allowed to do this because they have the money service business license in order to do that. And we could partner up with Bittrex, for example, so they could sell our StableUSD token, our stablecoin for us, and have people wire USD to them. So Bittrex would be one of the partners. Other exchanges could be our partners. Banks could also be our partners. For example, I think, I don't remember if this was the correct bank. It was one of the crypto-friendly banks in the U.S. I think it was Silvergate Bank, but I think somebody told me that Silvergate Bank was selling Tether for US dollar wire at some point as well. And so, we can find other banking partners to partner up with in order to spread the reach and market share of our tokens.
Interesting. So you want to basically spread your reserves across as many bank partners as you can to prevent censorship?
Well, what do you mean censorship?
In case the government, for any reason, decides to crack down on cryptocurrencies.
Well, we're actually not worried about a government crackdown on our stablecoins, for example, for instance, because we comply by the law. If you look, I'm not a lawyer, so you gotta talk to your own lawyer. This is not legal advice. Disclaimer: none of this is investment tax advice, by the way. Just my own personal opinion. I should have done this disclaimer up front. But if you look at FinCEN regulation under the Department of Treasury in the United States, I think it was in 2013 that they released guidance on virtual currency, and what our product and Tether and TrueUSD, what the decentralized stablecoins typically fall under would be classified as convertible virtual currency. So this is already regulated under FinCEN. You need to have a money service business license to carry out this kind of operation. And so with a regulatory framework in place, and as long as we comply by the law, as long as we conduct our KYC anti-money laundering operations at the best of our ability to make sure that no terrorist or drug trafficker is able to use our system to do anything bad, then there's no reason for the U.S. government to shut us down, or TrueUSD, or Circle USDC coin, which will be doing very similar things to us.
So it's my understanding that Stably will not charge fees. Is that right?
Right. So we're going to have an indefinite promotional period where we charge zero fees for people to buy stable coins from us and also to redeem stable coin from us. And we will not, in the long run, we don't even plan to really charge fees for transactions, because we are really aiming to make most of our income off of the reserve, of our float income from the reserve.
Could you expand a bit on that?
Excuse me?
Could you expand a bit on how Stably plans to...
Oh, float income?
Yes.
So float income is basically interest income that you earn on a reserve. For example, if you have... if you use PayPal, for example, PayPal invests the money that you put in transit with them in money market securities, because MSB law only allows you to invest in these securities. And so you invest in these, couple of weeks treasury bill or 1 month high grade corporate bond, those kind of things. That pays a small interest rate. Typically around a rate right now is about 2.5% a year. In the future, as interest rate increase, this rate will also, the float income expectation should also go up. So yeah, if you kind of do the math, for example, in the case of Tether, I don't know if they do this with their reserve, but if we had the same reserve as Tether, which is $2.5 billion right now, a lot of it would be invested in money market securities, which mean we're going to be earning, let's say, 2% a year off of $2.5 billion. Just kind of do the math yourself and figure out how much money that is, right?
Right.
Yeah.
So that's interesting. I mean, we're going back. Bitcoin began, sort of like anarchists and libertarian, almost against central bank issued fiat. But in a way, we are going back to square one when we're investing in the US dollar. Do you see a future without central bank issued fiat?
Well, let's go back to a fundamental question of what is money. Money is trust. Trust in the fact that the buyer will accept this money for what they think it should be worth. And so trust is really at the core of monetary system. The reason that the U.S. dollar has so much power in the world right now is because there's trust in the U.S. government. Even though the U.S. dollar is not backed by gold or anything anymore, right? But implicitly, everybody knows that the U.S. dollar is backed by the full might of the U.S. military and its nuclear weapon and aircraft armada, So, and of course, it's technology prowess and all these startups and companies over here. And,
judiciary system.
So many things I can get into. And so there's this implicit trust that, this dollar is going to retain its power and its demand for many, many years and decades to come. That's where the power got its power from. If for example, if we were to get attacked by Russia or China or something, then the dollar would fall in value because, hey, our power just got, insulted upon, I guess.
Right.
So, and so in the case of cryptocurrency, what are we trying to achieve, right? We're trying to create decentralized medium of value exchange. For now, most cryptocurrency are very volatile. They're not suitable to be reliable medium of value exchange or even stored value. They could be used for speculative purposes or for growth or whatever, right? And so those are separate reasons. Right. But for the most fundamental use case of money, it is value transfer. It is storage of value. It has to be fungible. It has to be, durable. And so this is something that cryptocurrency on their own cannot achieve yet. But if we take a quick step back and realize, hey, hold up, where is there already stability? Look at the U.S. dollar. It's the most powerful currency and most widely accepted currency in the world. And so why do we have to go and invent something new in order to accomplish what the dollar has already done for many, many years? And so digitizing the dollar into a stable coin is just essentially the next step. You put a dollar into your reserve, you create a token that represents it, that has a claim on it. Now this token could be almost instantly transferred anywhere in the world. It could be integrated into decentralized application. It could be almost infinitely divisible, right? And so it's basically, if you were to look at a dollar bill, if you were to hold a dollar bill in your hand and somehow this dollar bill was to be able to teleport anywhere in the world, it could be broken up into hundreds of thousands of pieces.
As it does.
That's exactly what a stable coin is. That's just the next evolution. We're not thinking of ourselves as creating something revolutionary that's gonna upend everything. That's what Basis is trying to create. That's what Maker is trying to create. They're trying to create decentralized stablecoin that achieves stability from not relying on the underlying asset, on the asset that it's pegged to. That is revolutionary. Best of luck to them and power to them. But for us, that could be accomplished by just basically creating a bridge between the dollar and the blockchain economy through a stablecoin, which would achieve a lot of it would satisfy a lot of use cases and achieve a lot of market share and usage right away.
Right. So when we think about the use case for a dollar, it's an infinite market basically. So that leads me to my next question. There's around 30 stablecoins today, and probably there will be many more by the end of the year. How do you see this moving forward? Do you envision thousands of stablecoins, hundreds of stablecoins, mergers between projects, a lot of failures? How do you map out the future in your opinion?
I think it's going to be similar to most tech company cycle. Typically, when a new technology like this come out, a lot of promise, a lot of sector, a lot of people try to jump in. Smart money comes in into things that are promising. And that's why we're seeing Goldman Sachs jumping into this through Circle. That's why, there's Trust Token, there's us, and there's Saga, there's a bunch of other projects that are going to the space right now. So that's my short-term view. I think more and more players are going to jump in. You say there's 30 stablecoin projects, right? I'm willing to bet that more than 20 of them are decentralized stablecoin,
right? And
not too many of them are centralized. And so as we move forward, I think that trend will continue because everyone wants to figure out how to really create a stablecoin, make it decentralized. That's the holy grail. Holy shit! If you could do that and scale it and actually make it work and convince existing businesses and merchants to integrate that into their supply chain operation, that's it. But that's why everyone wants to go for that space. And so I think as more and more stablecoin projects come out, we'll get to like hundreds of projects, hundreds of stablecoins in the next few years. Most of them is going to be decentralized, and then over time, a lot of them's going to fail, a lot of them's going to crash. There's going to be some sort of fraud here and there, as with most sectors.
Unfortunately, yes.
And then it's kind of like Tether, right?
Right.
And so, not saying that Tether is a fraud, but
right.
A lot of
the judge is still out, but yes, yeah.
So as more and more companies fail and crash, more stablecoin fail and crash, things will kind of like get consolidated over time. And so 10, 20 years from now, the stablecoin sector will probably be a very highly commoditized space where there will probably be less than 20 relevant stablecoin where most of the market is dominated by the top 5 or something like that.
Mm-hmm.
And who knows, there might be one ultimate stablecoin one day that comes out that's actually kind of like an ETF. That's just kind of like a basket that is comprised of all the other stablecoins, right? That could be something that somebody will build one day. Sure, if somebody doesn't build that, I might. So, I think there's going to be a lot of innovation coming out, and the key thing here is we have to be cautious, but at the same time we have to be open-minded, right? Mm-hmm. Like I believe in my centralized model for a variety of reasons. At the same time, I don't want to shoot down the decentralized model. I think I have certain criticism and questions over their effectiveness, but I would like them to go to market. I want to see it play out. I want to see if it actually really works because, in the name of progress, why don't we want it to work, right? And so if it does work, that's good news for me too, because now my team can start focusing on creating decentralized stablecoin and venturing into that space after we have captured a large market share over at the centralized stablecoin space. So
awesome. Yeah. So Kory, I know based on your roadmap, the open beta should be coming up soon. How can listeners buy StableUSD? And also, given KYC and AML practices, will it be available for users in developing nations such as Venezuela, which I also know it's important for your team?
Well, it all depends on KYC, AML background checks, and also current regulations and if there's any sort of embargoes or sanctions again, countries like Venezuela that might bar us from serving clients there. So I don't want to make this a solicitation for buying and selling StableUSD token. And so all I will say right now is we will release more details in the upcoming week. Cool. But the basic answer is if you are, a good person who's not a drug trafficker or a terrorist, and you have the proper documentations to pass a KYC AML background check, then there's no reason why you should not be our customer.
Great.
Yeah.
Kory, this was a fascinating conversation. Thank you very, very much for your time, and wishing you and the Stably team Much success with this project.
Thank you, Leon.
And remember, if you're interested in learning more about Stably, check out their website, www.stably.io, or follow them on Twitter @StablyCoin.